Hey, good morning, good evening, good afternoon, wherever you are in the world listening to us. This is Future of Fortunes. This is Jake Claver with my partner in crime, Byron Wolf. How are you, Byron?
I'm great, man. I'm great. Living this beautiful life and just enjoying being. I'm in Dallas for the week. Then we hit Nashville, then Austin, and back home to AZ. But yeah, man, it's been good. It's good, good travels. Seen some crazy stuff in the news we were just talking about.
Mm-hmm.
Like we just had the big conference over in Singapore. Coinbase delisting multiple things. We've got, Bitcoin finally peaked above 17K. So maybe we're seeing resistance, maybe we're not. Like it's just been a crazy couple of days. So we're going to talk about a number of things today. But yeah, just hang with us and hopefully you'll get some knowledge.
Yeah, hopefully it'll be good for you guys.
Yep.
Probably get into like maybe some of the reasons that the innovation might be stifled because of the things going on in Singapore, and then kind of the
Yeah.
ramifications of what that might mean for retail investors, and then also with them removing those wallets on Coinbase. So that's XRP, XLM, Bitcoin Cash, and Ethereum Classic.
Yeah.
Bitcoin Cash and Ethereum Classic are the original blockchains for Bitcoin and Ethereum.
Yep.
Um, I don't remember what year it was. I think it was 14 or 15 that there was a hard fork for both of those.
Yep.
Ethereum Classic was because of a 51% attack. So if you don't know what that is, the Ethereum Classic uses proof of work.
Yep.
And if more than 51% of the miners on a network collude together and change a transaction, they can do that,
Yep.
which people don't realize. Then they took that mistake, quote unquote, and left that as the original blockchain, which is Ethereum Classic, and then they corrected it and changed it to the new Ethereum that we have now that's just actually migrated to proof of stake.
Yes.
So, and then Bitcoin Cash, that was a result. It was also a hard fork, but it was a result of the amendment being passed that they wouldn't increase the block size.
Yep.
So most people aren't going to know what that means, but basically there was a difference in opinion between some of the people validating on the network and others, and the people that saw the utility there, they increased the block size, and that one was Bitcoin Cash, and then Bitcoin didn't, and that's what Bitcoin is today. So
Yep.
we'll see what happens with those. It's odd that those four particular wallets are going to be removed from your ability to hold those coins on Coinbase. They've cited low usage, which could be true. I mean,
Yeah.
they
Yeah.
delisted XRP when the lawsuit came out with Ripple, um, but I don't hold any assets on exchanges, so we'll see what happens there. But maybe they get listed as grandfathered in a certain asset class. We'll just have to see.
Yeah, it is weird. Like those four, I don't recognize the connection for those. So it's a little strange to me for those four specifically. And a lot of people, I will say this, I've seen people that are, they're in Bitcoin or whatever, or some other kind of crypto, and they think that like, oh, well, I'm going to like Bitcoin Cash or whatever, and like, so that's a cash asset, and I'm like, well, no, that's not. Like, no, this is not like a stable coin or like this is your dollars, like, and I think that stems from a lot of people assuming that like Bitcoin is crypto. Like I've heard people say that, like, oh yeah, I'm into Bitcoin, I'm like, oh, okay, like, how many coins you own there? They'll say, oh, well, I've got this in XRP or Ethereum or, this, that, the other. And I'm like, so you're in crypto, not in like Bitcoin. And they're like, yeah, I'm in Bitcoin. Like, do you have Bitcoin or do you have crypto? Because those aren't the same. This isn't
Right.
Kleenex and tissue, like, I
Right.
mean, so maybe it's, people thinking that it's, like, okay, well, I'm in cash and then Bitcoin Cash drops, in line with everything else. So maybe that's it. I definitely don't feel like low trading volume makes sense. Like, you know, yeah, for XRP because they don't allow you to. So that, I mean, once you delist it, obviously you're going to have low, low trading. But yeah, the rest of them, I'm not really sure. And I don't know if that ties into this, the Singapore or not. Maybe it does, with them
Yeah.
trying to protect,
Get into that.
small
What all does
investors.
that entail?
So essentially, what happened is, so the U.S. the CFTC the United States Commodity Futures Trading Commission, which is headed up by Christy Goldsmith Romero. So she basically, came up. She said, "Hey, we need to protect our investors. We need a new class of investors. So our retail investors, we need to redefine what that is. Where we used to assume a specific way, like the retail investor now is, the young guy, that is working a normal job or is, Uber Eats or Grubhub or, whatever gig work, and they're making, less than 50K, so people that prior to kind of the crypto craze were not investing because they were, making enough money really to kind of get by, and they weren't thinking along those lines.
Well,
The exchanges, go
to
ahead.
your point, like it's only 10% of people in the US that own stocks, right?
Yeah. Yeah. Yeah,
So
I'd be interested to see what the study would show for people that have held, not necessarily hold, but have held crypto over the last, say, 5 years. Like, I'd be willing to bet that number's more than 10%. Like I really do. Because so many people get into it and it's so widely available. Like, I mean, if you Cash App, you can go in and buy crypto now. Like, it's everywhere. So, like, I'm not a big fan of any kind of government intervention, anything like that. I think everybody knows me knows that. But I think the premise is good. Like, let's protect people. The leverage got crazy out of control with a lot of the crypto coins. And so having some protection, I think, is good. But like, the people that are going to provide that protection need to have in mind all the different avenues of how that works out. Not necessarily, hey, we're going to protect you by keeping you from being able to transact business. People are going to find workarounds no matter what the situation is. So, I mean, and you see that in business, you see that in jobs. Like, I mean, that's the nature of people.
that's the beauty of a free market, right? Like
Yeah.
that's what capitalism is at its core. Is you see an arbitrage opportunity, you can buy cheaper here and sell higher there, then you're going to exploit it. So
Yeah.
to your point, like a lot of people use a VPN so that they can
Yep.
purchase on exchanges that are listed overseas, and there's still KYC and AML on those. You're still
Yeah.
doing what you're
Yeah.
supposed to be doing, and as long as you're paying your taxes,
Yeah.
I don't see a problem with it personally. But
Yeah.
well,
And
we'll
yeah.
put the disclaimer right here.
Yeah, yeah, yeah. Keep the
Anything,
disclaimer for sure. Like, we are not telling you what to do, or this is not investment advice.
yeah, we're
Don't
not
do anything.
financial advisors. Anything that
Yeah,
we say on this podcast is for entertainment and educational purposes only. Please consult with your CPA, attorney, tax advisor, financial advisor before making any tax, legal, or financial decisions. There we go.
perfect. Love it. Love it. So, but I do want to say something about that. So, the people that are out there, and again, this is not tax advice. This is just like be real advice. If you are using a VPN to trade crypto, whatever you're using it for, like, I promise you, the government knows what you're doing. So, like, if you're like, well, I'm using a VPN, so if I report this, I could potentially get in trouble. Like, no, don't do that. Like, if you need to do it, do it. But report what you're doing. Like, the government's not going to come after you because you use a VPN, right? They're going to come after you because you didn't
File your
disclose,
taxes.
yeah, on your taxes. So, like, use it if you're going to use it, but use it correctly, follow the law, pay your taxes. Way better. Jail sucks. Like, don't go. It's not fun. Like, I've got the brochure. I'll send it to you. It's horrible. So, yeah, just pay your taxes, do what you're supposed to do. But yeah, I mean, tons of people use VPN for things. Like, I'm definitely not against a VPN. Like, it sometimes it does make sense, and there's certain things that, it does. If you need to trade something overseas, or I mean, I know people that use VPN to buy plane tickets because
Yeah.
if you're in the US to buy plane tickets, they cost more, yeah, than they do outside of it. So, they'll go outside to buy a plane, so there's a lot of legitimate reasons to have one. So don't just because you're doing something that seems a little whatever, like, do your research. Like, there's nothing illegal about using a VPN. Again, not legal advice, but it is what it is. Anyway, kind of back to what I was saying. So, she wants to essentially regulate some of these things. She wants to create a new level of investor. We've heard the rumors about the accredited investor going up to $10 million, which is crazy to me. But yeah, so there's a lot of things out there, and I'm not saying that it's going to happen, but I do think that there needs to be some coverage for like the massive leverage that have happened with coins. And we've talked about this on past episodes. So if you haven't heard, like, a lot of the cryptos will create these coins. They use those to leverage, to create the liquidity, to grow it, blah, blah, blah. So, I think Jake and I, we're both in huge agreement that like utility is where it's at, don't use leverage. The utility is really where it's at. So like do your research. If you're going to invest in something, make sure it's, what is what it is, or like that it serves a purpose to what you're,
Right.
doing. If you're just wanting to play a lottery play and you're trying to ride that wave of leverage, then know that that is what it is going into it. Right.
Well, and have the collateral if you lose, right? Like, and that's the problem with a lot of these people is they get over levered and then they can't pay. And then when they can't pay, they default on their liabilities, which are an asset on somebody else's books, and then they can't pay because they're over levered. And so it's just a domino effect. And that's what you're seeing with FTX and everything that's transpired from there is they've had all these creditors that are now going bankrupt also. BlockFi had all their assets custody with FTX, and they just filed this last week, Chapter 11. Genesis is on the brink of bankruptcy. They're trying to raise capital right now. So they're going to bring in hard regulations around this stuff, with what's happened. And it needs to be done, just like Byron's point. There needs to be rules in place to prevent some of this, especially for retail. Your average guy that's driving Uber Eats that takes 100x leverage on a trade and loses his whole year's salary on one trade. There needs to be limits and laws in place for that.
Yeah, because people aren't gonna, I think there's an assumption of safety where there is no safety. Like we think like, okay, well, if I can do it, then it must be safe. Like somebody has looked into this, somebody has made sure that this is safe for me. And so the taking on of risk isn't like a reasonable assumption of risk, because they're still assuming that it's safe. Like, or some moron, again, we talked about this, like, don't take crypto advice from your mail person or UPS driver, but like, somebody said, oh yeah, man, this is great, like my cousin made so much money, it's insane, like he just bought 12 Cadillacs or whatever, but you got to do your own research, you got to look into these things, you got to be careful, but if you do your research and it is what it is, like then put some on the line 100%, but like know what you're investing in, and like don't put up so much that like you got to eat ramen for the next 3 years to recover, right? Like nothing against ramen, but it's not, that's college stuff,
right? Like, when you're broke college kids, you don't want to be a broke 30-year-old eating ramen or 40-year-old eating ramen.
Really, really hard to like raise kids eating ramen all the time, or like find a girlfriend, or whatever your goals are. Like, not so easy on ramen. Like it doesn't work. So I know it's crazy. Yeah, and the Genesis, they're working to avoid the bankruptcy. I think, I keep waiting for that to hit. Like, I think that that's probably going to be any day now. Hopefully, they get it cleaned up and they're in good shape. But man, like, it's so many things have failed recently that like it's hard for people to have confidence, right? And so we've gone through this crypto winter. And so like to say, hey, we're going to do this and everything's going to be fine. Like people just don't trust that anymore. They see blood in the water, and they're trying to get out. Like,
and we've mentioned this before on this podcast. One of Warren Buffett's famous quotes is "Be greedy when others are fearful, and be fearful when others are greedy." So everybody's scared right now. If and like to your point, if you've done the research on something, a lot of things are on sale. It's a good opportunity for somebody that's well researched and consults their financial advisor about it.
Yeah, 100%. I mean, I can't imagine when Bitcoin was in the, like in the 40s, hitting up into the 60s. Like if, somebody would have said, hey, I got Bitcoin for 17K, people would have fallen all over each other, to buy it.
Right.
But now like we're kind of stoked that it tipped that line, like went over 17K, right? Like, oh, that's a good sign, so, but like, people aren't lining up to buy it either, so, we haven't seen it like, continue to skyrise, but all this stuff is cyclical, and so history always repeats itself, not in the exact same way, but it does repeat itself. And so if you're looking at it, you're doing your research, you're looking at these lines, like you're looking at the factors, and today is not the same as 10 years ago, 20 years ago, 30 years ago. I get that. But, we do have cyclical life cycles of everything. And so like it's changed, but it will essentially do the same thing that it's done in the past. So we will see. And again, not financial advice. Don't go spend every dime you got, on Bitcoin. But we'll see a resurgence. I don't know. I can't tell you that we're going to hit 70K again. I can't say that. But like I do think we'll see another increase because it's cyclically, that's what's happened. It's hit highs and it drops down. People, get scared to death and then it comes back again, and so it's a little higher every time, which is
Yeah.
great. The 70K may have been artificially inflated with all the free money that existed in the world, and like I don't see that. Like, of course, we just had the ERCs, the PPP before that. So there may be a new, thing that the government does to give that free
UBI.
money back out.
Well, I think
Yeah.
we've talked about that before.
Yeah, we have. Yeah.
We'll see what happens. I do. So it's difficult to predict future performance on a 10-year time frame, which is about what Bitcoin's existed. It's actually, I think the first block was mined like June 15th of 2009, something like that. So what is that? We got 13 years. Yeah. So past performance doesn't always predict future performance, but it's a good indicator, and that's how people do technical analysis and all those things.
Yeah. And first to market means something.
Right.
Bitcoin is basically first to market.
First mover.
So yeah. So that counts for something. They're probably not going to go anywhere. Maybe they will. Maybe they won't. I don't know. But
as long as it remains a fixed supply, I think it'll be collateral of some kind. Because again, people want an inflation hedge, which it's not proven really to be an inflation hedge over the last year with everything that's going on. It's been pretty well correlated to the stock market, but as things change and progress, like we talked about here with utility, I think it could definitely play a role in the new economy and potentially as a hedge after utility for other assets come in because of the limited supply.
Yeah, of course. And and it's a holder of wealth. Like, so a lot of people look at, they'll say, oh, well, gold's so valuable, whatever. It's a pretty metal, but like the utility of gold is not that great that it makes sense for the price. So it's a holder of wealth. And so I feel like Bitcoin is going to be that, like it's first to market. So it's a holder of wealth. And like, does it have utility? Yeah. Does it make sense for the price versus utility? No, very similar to gold. But it's a good holder of wealth. People know what it is. Again, Kleenex tissue, right? Like everybody knows what Kleenex is. You know exactly what it is. That's not what it is. Kleenex is a brand.
You went over that at the beginning of this, right? Like it's almost synonymous with crypto. When you talk about crypto, people think Bitcoin. And when I first got in, that's all I knew was Bitcoin, right? And then I found out, oh my God, there's 10,000 more of these things when I got in 2 years ago. And now there's 40,000 different projects.
And some of them with the worst names too.
Oh my God. You don't talk about Cum Rocket or MILF Token or any of these ridiculous.
Yes. What like oh man. Different time. Maybe I'm old, but like I'm just like, come on, guys. Like,
it's an obvious rug. Like, come on. But
I mean, they had one called Rug. Like that, like, come on, guys. Like, let's think about this. But what is it?
And I think when regulation comes in, and it will soon, like they're going to regulate stable coins and some of these currencies, and maybe that's part of why Coinbase has just removed those specific ones from your ability to hold. That's speculation. It's not anything tangible behind that. But that's, I'm willing to stick my neck out there and say that those potentially have a particular grandfather jurisdiction where other ones might be pursued by the SEC for being securities. But I think a lot of this stuff, when regulation is brought in, will go to zero. Like overnight, people will run for the hills.
Yeah, I agree with that. And I hold a pretty diverse, like not on any exchanges, but a ledger. Again, like if you're gonna have cold storage, buy it directly from the manufacturer. I know we've said this in other podcasts. Do not buy it from Amazon. Do not buy it from any reseller. Don't get it on eBay. Don't buy it from your Uncle Charlie. Like, don't buy it used. Buy it directly from the manufacturer. Get some protection. But like, I own a ton of these that are just kind of on there, but they're like literally if those go to zero tomorrow, no big deal, right? I bought them with full insight into the fact that, these could
It's a
be
risk.
total garbage plays, but they could turn out to be good. Like, I believe in the utility. So, I'm going to buy them. And like, if something better comes along, then it is what it is. Right. Like, the horse was the best way to get around, right? Until the car came along, so like, there's always going to be great utility. There's always going to be things that make perfect sense in the time. And then somebody does it better, so, at the time I like the concept. I think it's great. With the crypto, like, I think we're gonna have legislation, which is gonna hurt things, I think, in the short run, but maybe we'll potentially have a
It'll
positive impact
be
on it.
like
But
the internet, right? Like you were around for that boom in 2000 and you got to see the innovation that was taking place. And when it was the wild, wild west and there was all that speculation, you had stuff
yeah,
like pets.com sell
yeah,
for
yeah,
$1 billion or whatever it was back
yeah,
then. I don't think it was a
yeah,
billion, but it was a lot of money.
yeah,
And it didn't end up being anything,
yep,
right? Like just a shell that
oh
had
yeah,
.com after it.
yes,
And when the tulip bubble pops, they bring in regulation, they come down hard on things, and then the things that are going to stick around long term are what survive. So,
yeah,
then you have the Amazons, the Googles, the other things that were born in Web 2 later on.
yeah,
And that's what this is, right? We've run up, we've had another crash, and this has been significant. Kevin O'Leary, which God save him,
yeah,
he he was the one that said after Luna happened that we would see a big player go to zero. And while he was backing FTX, he obviously had no idea that it would be FTX.
yeah,
Otherwise,
yeah.
he wouldn't have said that. But
Hopefully not. Yeah,
yeah, hopefully not. Hopefully, he didn't have
yeah, yeah,
any insider. But if I was him and knew that, I wouldn't have my money there. So
yeah,
he did lose a significant amount of money in FTX. Um, but anyway, he said a big player would go to zero, and that's what would be the catalyst for them to bring in regulations on the exchanges and specifically the stable coins. So I
yes.
think he's going to get his wish.
Yeah, and that's what we're saying. I mean, the little thing in Singapore. I mean, that was a big topic. This increased regulation and watching things, and the protection is always the key word that scares me a little bit. When they talk about protecting people, like, that's
Taking away
what's
rights and
yeah, taking away
stifling
rights.
innovation. But
Yes.
I don't want that role, man. Like it would be difficult to come up with something that walked that line between protecting everybody, but at the same allowing for innovation in a space. These
Yeah.
regulators
Yeah.
have a hard job. And so up to this point, they've just kind of thrown their hands up and said, y'all hang yourself and then we'll come in when you guys want us. And so I think that's what's happened is, kind of blown up and now they're going to come in and regulate hard. And then probably over time, they'll loosen it just like they did with the banking and the loans from 2008, you know?
Yep. Yeah. I
Things
agree.
they constrict the noose and then ease back over time. Then there's a problem and they pull it back in.
Yeah. And you talked about this, I think it was last episode, maybe one before that. Like there's like, so a lot of coins and a lot of these will do like a hold period, where your money, it's tied up, you put it in and it's tied up for a certain period of time. So like, to me, that's the regulation that we need. Like, if you can't afford to put this in and like leave it there for a certain period of time, then that's not money you can afford to invest, right?
Mm-hmm.
And so I'm a big fan of that potential regulation of like, hey, once you put it in, like, it's locked in. Like, you have a locked out period, but you can't pull this money. So like, even if you need to. Now the negative with that is you're going to see tons, nothing against JG Wentworth, but like, that's probably the most common, but you're going to see tons of this niche kind of thing grow up where it's like, hey, we're going to loan your money on your money that's tied up, so
Mm-hmm.
people are always going to find a way around regulations or
Well,
VPN.
you need liquidity in a market, and that's what crypto is also going to bring in. Like a lot of these assets that are illiquid at this point, private equity, multifamily properties, real estate,
Yep.
all of those things will be tokenized on the blockchain and be much more liquid than they are now.
Yeah.
So maybe it actually solves some of that issue that you're talking about there.
Yeah. Yeah. Nothing against that. I mean, I'm all for regulation that makes sense and doesn't stifle innovation, but like, that's a tight line to walk. Like, yeah, that's tough. Like, I don't envy anybody who has that as a task, because I don't have the answer to that. For everything that I can think of a workaround,
Right.
so like, hey, let's do this. And then I immediately, I'm like, this is how I would work around that, so it's it doesn't help much, but something that would make sense. Like I like a lockout period. I think that's smart. Like we've done that in numerous industries and it's worked decently well. So something like that would be good, but like raising the accredited investor to 10 mil, like I
I
mean
don't
now
think
you
that
got
accomplishes anything.
yeah, that
I,
doesn't. And
I
there's
think
ways around that too. So
I mentioned this before we got on the episode. Like, so you can take your Series 65 to be accredited as long as
yeah,
you're sponsored by a broker afterward.
yep.
And I like that. I don't like how much regulation was on that test. And just full disclosure, I took it and there was more regulation than I studied for, and I didn't pass. I'm
Yeah.
accredited through other means, but
Yeah.
so. But I think that would be great for the average retail investor, just
Yeah.
like you were going to get a gun license, right? Like
Yeah.
there's a
Yeah.
certain training that you need to go through
Yep.
in order to be prepared for the dangers that are involved with that.
Yeah.
And there are
100%.
certain levels of licenses for somebody that holds a handgun. Like
Yeah.
and there are certain regulations that you have to abide by and things you have to disclose at each one of those levels. If you
Yep.
have your it's a third level, you got to be fingerprinted, and there's a bunch of other things for you to have an automatic weapon.
Mm-hmm.
And people still work around that, right? Like
Oh
that's
yeah. Yeah.
probably not going to go away, but at the same
Exactly.
time, it mitigates that risk.
Yeah.
And if all of these exchanges do become compliant with whatever regulations are put in place, which they'll have to be,
Yeah.
then they're not going to be selling to anybody that doesn't have those certifications. So
Yes.
um, I don't like the current system because I do feel it stifles the average retail investor from hitting it big and making a bunch of money. But at the same time, you do want people to be safe and not be crazy with leverage like you talked about.
Yes. Yeah. And I think like, there's so many things that are like timing is everything, right? And so when I talk about a lockout period, I think like within the exchange,
Yeah.
right? So like you buy into something, it like skyrockets, I don't want to limit people's ability to sell, but like you can keep that within that exchange
Yeah.
or
Trade
maybe
it on that platform
say,
or I,
yes, yeah,
I think maybe for me, that's more concerning people that are launching projects that have malicious intent, right?
yes, yeah,
So if you're a large token holder for a project that you launched, you might let it run for a couple weeks, a couple months, a couple years like Luna, and then you rug everybody and run off with all the money. If you
yeah,
had a lockup period or you weren't able to do that, or they limited the amount that the founders can hold so that wasn't an issue, then those problems wouldn't occur. And it would be much less lucrative for people to hold their money there. And it would really incentivize only the only people that would participate would be the ones that really had an interest in long-term adoption of the technology.
yeah. Yeah, 100%. Yeah, and that I mean, you need the outside people as well, but like you need people that are in not necessarily for the long haul because nobody's in for the long haul anymore. Everything is
Flip it.
different realm of short, but like people that that actually believe in the project, want to see what it does. Like we'll see it through to fruition,
Fruition.
fruition. Thank you. Get my mind on fruit. So like that will actually see it through, and I think that that's important. That you're not getting a bunch of people that are just like, oh hey, this sounds cool. Let's wait for like some people to buy in, and then let's like pull it out because something that could be a really amazing thing, never gets to make it to that level. It never becomes the butterfly. It just stays a moth. And so like I definitely feel like there should be something with that, and I think a lockout would go a long way towards that. I mean, people could still pull it out, anyways, or
Yeah,
leverage
like you
against.
said, loans against it, which I
Yeah,
mean we're a proponent of. We've talked about that
yeah,
before in ways so
oh yeah,
that you can leverage your assets without any tax liability. Taking loans
yes,
against that's a fantastic way to do it.
oh
And I
yeah,
think
yeah, 100%.
again, I think this technology will lend itself toward the DeFi protocols that allow you to hold collateral somewhere with a trusted entity if it's a physical item, or even on the blockchain if it's a digital item, and take loans against it.
Yeah, yeah. No, I agree. Yeah, and that's we have to come back to the original intent, and the original intent was, to open market.
Create more efficient systems.
Yeah,
All that
yeah,
stuff.
yeah. So the
Well,
more
cool,
we
brother.
regulate, the more we take away from that. Unfortunately. Yeah.
Yeah. So that's all the time we got for this one. Hope you guys enjoyed it, and we'll see y'all next week.
Thanks, man.
See you, brother.
See you, bro. Stop.
Did I get it?